When a judgment debtor has hidden their assets behind a business entity, a corporation, LLC, or partnership, the legal doctrine of piercing the corporate veil may allow you to reach those assets directly. This is one of the most powerful but procedurally demanding judgment collection tools. Here's what piercing the corporate veil means, when it applies, and how to pursue it. The legal principle. Corporations and LLCs exist as separate legal entities from their owners. Normally, the debts and liabilities of the entity are not the personal debts of the owners, and vice versa. This separation is the foundational benefit of incorporating. But that separation is not absolute. Courts will disregard the corporate form, pierce the veil, and hold the owners personally liable when the corporate form has been used as a device for fraud, injustice, or evasion of legal obligations. The specific factors that courts consider vary somewhat by state, but the core elements are consistent. First, was there a unity of interest and ownership between the individual and the corporation, meaning the corporation was essentially the alter ego of the individual, not a genuinely separate entity? Evidence of alter ego status includes commingling of personal and business funds, failure to observe corporate formalities, undercapitalization of the entity, and use of the entity's assets for personal purposes without proper accounting. Second, would recognizing the corporate form under these circumstances produce an inequitable or fraudulent result? Courts apply this test flexibly. The more egregious the conduct, the lower the bar for piercing. Common fact patterns that support veil-piercing claims. The debtor moved assets from their personal account to a business account immediately before or after a judgment was entered. The debtor incorporated a new entity and transferred their former business assets to it at below market value. The debtor operates a business through an LLC but treats the LLC's bank account as a personal account, using it for personal expenses without documentation. Pursuing a veil-piercing claim requires a separate legal proceeding, either as a post-judgment enforcement action or as a separate lawsuit. Investigation of the business entity, its financial records, and the debtor's conduct is essential to establishing the alter ego facts. People Locator skip tracing provides business entity investigation, officer identification, and related party analysis that builds the factual foundation for veil-piercing claims. Visit peoplelocatorskiptracing.com to place your order.